For the longest time, when investors thought about Bangladesh, one thing came to mind: cheap t-shirts, right? Well, that story is not just old, it's actually pretty dangerous to still believe. So today, we're going to tear up that old playbook. We're giving you a fresh, strategic guide to one of South Asia's hidden giants.
So let me just ask you straight up, as you're figuring out your China Plus One strategy, and I know you are, everyone is, are you missing a giant, a real giant? The conversation is happening everywhere, but the answer, well, it might not be in the places everyone's pointing to.
And this is really the core of it all. It's time to look at Bangladesh completely differently. This isn't just about shaving a few cents off production costs anymore. No, it's about seeing the country for what it's actually become: a seriously sophisticated hub for growth, for massive scale, and for building resilience into your supply chain.
All right, so that brings us to our first big idea here. If you really want to get what's happening in Bangladesh today, you have to just throw out that old mental image. You know the one. This whole first section is about moving beyond cheap labor and building a totally new framework. So, if the old view is out, what do we replace it with? Well, we've got a much more powerful way to look at it. Think of the modern investment case for Bangladesh as a machine, right? A machine powered by three different, but totally connected, engines of return. Let's dig into what those are.
Okay, here they are. First up, you've got the cost engine. This is all about driving superior profit margins, if you know what you're doing. Then there's the volume engine. We're talking about a huge, hungry domestic market of over 170 million consumers. And finally, you have the platform engine. This one's crucial. It gives you a hedge, a bit of a safety net, against all those supply chain shocks we've been seeing. It's the way these three work together that makes this whole thing so special.
But look, that first engine, the cost engine, to get that thing running smoothly, you have to be absolutely obsessed with one single metric: total landed cost, TLC. This is the single biggest place investors get it wrong. They see the low hourly wage and think they've struck gold, but that's not the real story. The real story is every single cost it takes to get your product from the factory floor to your customer. And this slide, man, it just nails the point perfectly. It's like an iceberg. What you see, the labor, the rent, that's just the tiny tips sticking out of the water. The real cost, the stuff that can absolutely sink your entire operation, is all that mass hidden underneath. We're talking logistics, backup power, compliance headaches, foreign exchange hedging, all of it. The investors who win are the ones who model out the entire iceberg.
Okay, so you get the three-engine model, that's great. But the big question remains, is Bangladesh actually the right move for your company? Because here's the thing, smart money doesn't just blindly chase the lowest price tag. It looks for the right strategic fit. So let's figure out if your business is a match.
And this chart here, this is where it gets really clear. Take a look. Bangladesh's sweet spot, it's scalable assembly and light manufacturing. It's the absolute best place for things that are cost-sensitive and need a lot of labor. But if you need, say, a super deep electronics supply chain, you're looking at Vietnam. Need high-end R&D? That's probably India. See? It's all about picking the right tool for the right job.
And that job, well, it's not just about sewing shirts anymore, not by a long shot. Yeah, the garment industry is still a beast, but the next big wave of growth, it's popping up in totally different areas. We have to look past the t-shirt to find these next-gen opportunities.
So where's the real action? It's shifting. In pharma, the game is all about building out export capabilities with world-class quality control. For consumer goods, FMCG, the battle isn't price, it's distribution. Can you get your stuff to all those growing secondary cities? And then you've got light engineering, which is all about replacing imports, assembling locally, and, this is key, offering really solid after-sales service. Now, this all sounds pretty amazing, right? But hold on. A smart investor, a strategic investor, always asks the hard questions. It's one thing to look at a growth chart, but what are the real risks on the ground? What are the operational headaches you're definitely going to face?
And that brings us to what we call the execution layer. This is where the shiny PowerPoint presentation hits the pavement. It's reality. And honestly, this is where most foreign investors totally wipe out. Your success isn't going to be about how great your product is. It's going to be about whether you can handle the nitty-gritty of customs, actually get your profits out of the country, and deal with things like unreliable power.
So, okay, we know the risks. But just knowing them isn't enough, right? You need a playbook, a way to navigate through all that. And that's exactly what this final section is. It's your execution playbook, filled with the essential strategies you need to handle that friction and actually win on the ground. First things first, your entry strategy is absolutely critical. For pretty much any business focused on exports, setting up shop in what's called a Special Economic Zone, or an SEZ, is the way to go. It's the gold standard. It cuts through so much red tape. Now, joint ventures, they can be really powerful, especially if you need a local partner for distribution. But you have to be so careful. The governance risks there can be a real minefield.
All right, let's bring this all home. How do you take everything we've talked about and make that final go, no-go decision? Just follow this simple logic step by step. 1. Does your business actually tap into those 3 engines we talked about? Cost, volume, or diversification? If yes, move to step 2. Can you operate inside one of those streamlined SEZs? 3. Have you actually built a super detailed total landed cost model, not just a guess? And finally, the million-dollar question. After all that math, is your cost advantage big enough to pay for all the stuff you'll have to do to manage the risks? If you can say yes to all that, then you've got a green light.
And really, that's what it all boils down to. Thinking of Bangladesh as just a cheap option is a recipe for disaster. It's not that anymore. It's a complex, incredibly dynamic market, and it rewards one thing above all else: strategic thinking. The winners, the ones who really succeed, are the ones who do the homework, model the true costs, and see the country for what it has become: a core, strategic platform for the future of global manufacturing.